Question 1. Scenario-based. Topic: negligence and legal liability. Scenario: Laura owns a bakery in North Carolina, and while delivering a large catering order, her delivery van collides with another vehicle. The accident was caused by Laura's failure to stop at a red light. The driver of the other car, John, sustains injuries and sues Laura for medical expenses, lost wages, and pain and suffering. Laura's commercial auto policy includes liability coverage. The case is brought to court and Laura is found liable. Which of the following types of damages is John NOT likely to recover under Laura's liability coverage? A. Medical expenses. B. Lost wages. C. Punitive damages. D. Pain and suffering. Answer: C. Punitive damages. Explanation: under liability insurance, the purpose is to indemnify the injured party for actual losses, such as medical expenses, lost wages, and pain and suffering, general damages. However, punitive damages are intended to punish the at-fault party for gross negligence or intentional misconduct, not to compensate the injured party for specific losses. Many liability insurance policies, including those in North Carolina, do not cover punitive damages as they are designed to discourage wrongful behavior. This aligns with public policy and the concept of insurance being intended for financial protection against unexpected losses, not punishment. Question 2. Topic: workers' compensation and employers' liability. In North Carolina, a worker was injured on the job and received workers' compensation benefits. However, the injured worker later decided to sue their employer for additional damages, claiming the employer was grossly negligent in maintaining safety standards. Under the workers' compensation system in North Carolina, which of the following is true regarding the worker's ability to sue the employer? A. The worker can sue the employer and collect workers' compensation benefits simultaneously. B. The worker cannot sue the employer as workers' compensation provides exclusive remedy protection. C. The worker can sue the employer but must return the worker's compensation benefits. D. The worker can only sue for emotional distress but not for physical injuries already covered by workers' compensation. Answer: B. The worker cannot sue the employer, as workers' compensation provides exclusive remedy protection. Explanation: in North Carolina, like in most states, the workers' compensation system follows the doctrine of exclusive remedy. This means that once a worker receives workers' compensation benefits, they generally cannot sue their employer for additional damages, even in cases of negligence. The system is designed to provide no-fault compensation to injured workers quickly while protecting employers from lawsuits. However, there are some exceptions, such as intentional harm or extreme gross negligence, but they are rare and difficult to prove. This structure balances protecting both parties in employment relationships and ensures the quick resolution of injury claims. Question 3. Topic: personal auto policy (PAP). Uninsured underinsured motorist coverage. A North Carolina driver is involved in an accident where the at-fault driver carries liability insurance, but the policy limits are insufficient to cover the full amount of damages incurred. The injured party has their own auto insurance policy, which includes underinsured motorist (UM) coverage. In this case, how will the injured party's underinsured motorist coverage respond? A. It will only pay the deductible portion of the at-fault driver's policy. B. It will cover the remaining damages after the at-fault driver's policy limits are exhausted. C. It will replace the at-fault driver's liability coverage entirely and pay all damages. D. It will not respond at all, as underinsured motorist coverage is optional in North Carolina. Answer: B. It will cover the remaining damages after the at-fault driver's policy limits are exhausted. Explanation: underinsured motorist (UM) coverage is designed to provide additional coverage when the at-fault driver's liability insurance is insufficient to cover the damages. In North Carolina, UIM coverage will pay for the difference between the at-fault driver's liability limits and the total amount of damages up to the policyholder's UIM coverage limit. This type of coverage ensures that the injured party does not bear the financial burden of damages that exceed the at-fault party's policy limits, but it only applies after those limits have been fully exhausted. UIM coverage is critical for providing additional protection in situations where drivers are inadequately insured. Question 4. Topic: commercial general liability (CGL). Coverage. A restaurant in North Carolina is sued because one of its customers slipped and fell on a wet floor, sustaining significant injuries. The customer claims that the restaurant's negligence caused the accident. The restaurant carries a commercial general liability (CGL) policy, which coverage under the CGL policy would respond to the lawsuit. A. Coverage: bodily injury and property damage. B. Coverage B. Personal and advertising injury. C. Coverage C. Medical payments. D. Business income coverage. Answer: A. Coverage Bodily injury and property damage. Explanation. Under commercial general liability CGL policy coverage provides protection against claims for bodily injury and property damage arising out of the business's operations. In this case, the slip and fall incident, a common liability exposure for businesses like restaurants, would be covered under coverage as it directly involves bodily injury. Coverage B deals with personal and advertising injury, while coverage C covers medical payments but typically without the need for legal liability, and business income coverage deals with lost income due to business interruption, which is unrelated to liability for injury claims. Question 5. Topic: Workers' compensation. Employer's liability coverage. In North Carolina, an employee working on a construction site is injured due to defective equipment. The employee is entitled to workers' compensation benefits, but the equipment manufacturer is also found liable. The employer's insurance includes workers' compensation and employer's liability coverage. Under what condition could the employer's liability insurance be triggered? A. If the employee files a third-party lawsuit against the employer. B. If the workers' compensation benefits are insufficient. C. If the manufacturer's liability insurance denies the claim. D. If the employee is not covered under the workers' compensation policy. Answer A. If the employee files a third-party lawsuit against the employer. Explanation. While workers' compensation provides the exclusive remedy for most work-related injuries, employer's liability coverage protects the employer in cases where the employee sues the employer indirectly, often through a third-party action. For example, the employee could sue the equipment manufacturer, who might then sue the employer for contributory negligence. In such a case, the employer's liability insurance would be triggered to cover any resulting legal costs or judgments. The other options are incorrect because employer's liability insurance typically responds only when the employer faces a legal liability outside the scope of regular workers' compensation claims. Question 6. Topic: Personal auto policy PAP. Physical damage coverage. James's car is damaged in a hailstorm while parked in his driveway in North Carolina. He has a personal auto policy PAP with both collision and comprehensive coverage. Which part of his policy would respond to this claim? A. Collision coverage. B. Comprehensive coverage. C. Uninsured underinsured motorist coverage. D. Liability coverage. Answer B. Comprehensive coverage. Explanation. Under personal auto policy PAP, comprehensive coverage, also called other than collision, responds to damage caused by events other than collisions, such as hailstorms, theft, vandalism, or falling objects. Collision coverage applies when the vehicle is damaged in an accident involving another vehicle or object, and liability coverage deals with damage or injuries caused to others. Uninsured underinsured motorist coverage covers damages caused by drivers without adequate insurance, since hail damage is not the result of a collision. Comprehensive coverage is the correct part of the policy to handle this claim. Question 7. Topic: Reinsurance. Facultative versus treaty. An insurance company in North Carolina underwrites a large and usually risky policy for a major corporation. To reduce its risk exposure, the insurer decides to transfer some of the risk to a reinsurer. The insurer prefers to negotiate the terms for this specific policy individually with the reinsurer. Which type of reinsurance is most appropriate in this situation? A. Treaty reinsurance. B. Facultative reinsurance. C. Proportional reinsurance. D. Excessive loss reinsurance. Answer B. Facultative reinsurance. Explanation. Facultative reinsurance allows the ceding insurer to negotiate the terms of reinsurance on a case-by-case basis, making it ideal for insuring large, unusual, or particularly risky policies. In contrast, treaty reinsurance applies to a broad category of risks automatically without case-by-case negotiation. Proportional reinsurance and excessive loss reinsurance are methods of sharing risks, but the key distinction here is that facultative reinsurance is used for specific policies that the insurer chooses to cede, while treaty reinsurance applies more broadly. Question 8. Topic: Unfair claims settlement practices. An insurance adjuster in North Carolina is handling a claim where the insured suffered significant property damage. After an investigation, the adjuster delays payment for several months without any valid reason. Which of the following would best describe this behavior under North Carolina's insurance laws? A. Misrepresentation. B. Bad faith. C. Unfair claims settlement practice. D. Breach of contract. Answer C. Unfair claims settlement practice. Explanation. Under North Carolina law, unfair claims settlement practices include actions such as delaying payment of claims without a reasonable basis, failing to promptly investigate claims, and not communicating with the insured in a timely manner. These actions violate state laws and regulations designed to protect policyholders. While bad faith may also apply in cases of intentional wrongdoing, the specific legal term for unjustified delays in claims handling is unfair claims settlement practice. Misrepresentation refers to providing false information, and breach of contract involves failure to meet contractual obligations. Question 9. Topic: Commercial crime insurance. Employee dishonesty coverage. A North Carolina business owner discovers that one of their employees has been stealing money over a period of several months. The business has a commercial crime insurance policy that includes employee dishonesty coverage. Under what condition would this coverage respond? A. The employee stole money from both the employer and customers. B. The employer was unaware of the employee's dishonesty until after termination. C. The employer knew about the dishonesty but failed to take action immediately. D. The loss occurred over several months and exceeded the policy limit. Answer: B. The employer was unaware of the employee's dishonesty until after termination. Explanation: employee dishonesty coverage under commercial crime policy typically covers losses caused by employees who steal from their employer as long as the employer did not have prior knowledge of the dishonesty. If the employer knew about the employee's dishonesty and failed to take action, the insurer could deny the claim. The policy will respond to losses as long as they are discovered within a specified time frame, even if the dishonest acts occurred over several months. However, coverage is limited to the policy limit, meaning any excess amount would not be covered. Question 10. Topic: Medical payments coverage. Personal auto policy. Pat Julia is involved in a car accident in North Carolina where she is at fault and both she and her passenger are injured. She has medical payments coverage under her personal auto policy. What is the primary function of this coverage? A. It covers Julia's medical expenses only. B. It covers the passenger's medical expenses only. C. It covers medical expenses for both Julia and her passenger. D. It only covers medical expenses if Julia is not at fault. Answer: C. It covers medical expenses for both Julia and her passenger. Explanation: medical payments coverage (MedPay) under personal auto policy PAP covers medical expenses for the policyholder and any passengers, regardless of fault. This type of coverage is designed to provide immediate financial assistance for medical bills resulting from an accident up to the policy limit. It is not contingent on fault, meaning it applies whether the policyholder is at fault or not. MedPay is an essential coverage to help with medical costs, but it does not cover lost wages or other types of damages. Question 11. Topic: North Carolina Motor Vehicle Reinsurance Facility. John has a poor driving record in North Carolina, making it difficult for him to obtain auto insurance from standard insurers. Which of the following options would allow him to obtain the mandatory auto liability coverage required by state law? A. Purchase high-risk insurance from a private insurer. B. Obtain coverage through the North Carolina Joint Underwriting Association. C. Obtain coverage through the North Carolina Motor Vehicle Reinsurance Facility. D. Buy insurance from a non-admitted surplus lines insurer. Answer: C. Obtain coverage through the North Carolina Motor Vehicle Reinsurance Facility. Explanation: the North Carolina Motor Vehicle Reinsurance Facility is a residual market mechanism designed to provide mandatory auto liability insurance for high-risk drivers who are unable to obtain coverage in the voluntary market. All auto insurers in the state are required to participate in the facility, which ensures that coverage is available to all drivers regardless of their driving record. The other options do not apply specifically to the state's residual market for high-risk drivers. Question 12. Topic: Commercial property insurance. Business income coverage. A restaurant in North Carolina experiences a fire that causes significant damage, forcing it to close for 3 months. During this period, the restaurant loses income, but the owner has business income coverage as part of their commercial property policy. What does this coverage typically compensate for? A. The full cost of repairs to the building. B. The loss of net income during the shutdown. C. Both the repair costs and loss of net income. D. Any penalties incurred due to missed supply chain deliveries. Answer: B. The loss of net income during the shutdown. Explanation: Business income coverage, also known as business interruption insurance, compensates the insured for lost net income and ongoing expenses, such as payroll, that continue during the period the business is shut down due to a covered loss, such as a fire. It does not cover the direct cost of building repairs, which would be covered under the property damage portion of the commercial property policy. This coverage helps the business remain financially stable while repairs are being made. Question 13. Topic: North Carolina homeowners insurance. Wind and hail exclusions. A homeowner in a coastal area of North Carolina purchases a homeowner's insurance policy. Due to the high risk of storms, the policy excludes wind and hail damage. What must the homeowner do to obtain coverage for these perils? A. Purchase a separate wind and hail policy from the North Carolina Joint Underwriting Association. B. Purchase an endorsement to add wind and hail coverage to the existing policy. C. Purchase flood insurance through the National Flood Insurance Program (NFIP). D. Apply for coverage through the North Carolina Automobile Insurance Plan. Answer A. Purchase a separate wind and hail policy from the North Carolina Joint Underwriting Association. Explanation: in coastal areas of North Carolina, many homeowners' insurance policies exclude wind and hail damage due to the high risk of storms. Homeowners can obtain wind and hail coverage through the North Carolina Joint Underwriting Association, which offers policies for high-risk properties. This coverage is separate from flood insurance, which covers flooding but not wind damage. Endorsements may not be available if the base policy excludes wind and hail. Question 14. Topic: Commercial umbrella insurance. A business in North Carolina is found liable for a significant injury to a customer resulting in damages that exceed the limits of its general liability insurance policy. The business has a commercial umbrella policy in place. What is the primary purpose of the umbrella policy in this situation? A. To provide coverage for perils excluded under the general liability policy. B. To extend coverage beyond the geographic limits of the primary policy. C. To cover the amount of damages that exceed the general liability limits. D. To provide first dollar coverage for any losses. Answer: C. To cover the amount of damages that exceed the general liability limits. Explanation: commercial umbrella insurance provides excess liability coverage beyond the limits of underlying policies such as general liability, auto liability, and employer's liability insurance. In this case, the umbrella policy would pay for the damages that exceed the limits of the business's general liability policy, ensuring that the business is not financially exposed to catastrophic losses. Umbrella policies typically do not provide first dollar coverage or cover perils excluded by the underlying policy. Question 15. Topic: Commercial crime insurance. Forgery or alteration coverage. A North Carolina business discovers that a former employee has forged company checks to steal money. The company has a commercial crime policy that includes forgery or alteration coverage. Which of the following would be covered under this policy? A. The reimbursement of funds stolen by forging checks. B. Legal fees for defending against claims of employee dishonesty. C. Punitive damages awarded in a lawsuit. D. Business interruption losses resulting from the theft. Answer A. The reimbursement of funds stolen by forging checks. Explanation: forgery or alteration coverage under a commercial crime policy reimburses the insured for losses resulting from the forgery or unauthorized alteration of checks, drafts, or other financial instruments. This type of coverage specifically addresses the theft of funds through forged or altered documents. Legal fees, punitive damages, and business interruption losses are not typically covered under this portion of the policy. Question 16. Topic: Medical malpractice insurance. A physician in North Carolina is sued for malpractice after a patient alleges that a surgical error caused permanent injury. The physician has a medical malpractice insurance policy in place. What type of damages is this policy designed to cover? A. Damages for breach of contract with the patient. B. Compensation for the patient's medical expenses and pain and suffering. C. Punitive damages awarded by the court. D. The physician's lost income due to the lawsuit. Answer: B. Compensation for the patient's medical expenses and pain and suffering. Explanation: medical malpractice insurance covers the costs of defending against malpractice claims and paying damages awarded to patients who are injured as a result of the physician's negligence. This includes compensation for medical expenses, pain and suffering, and other economic and non-economic damages. However, it does not typically cover punitive damages unless explicitly stated in the policy, breach of contract claims, or the physician's lost income. Question 17. Topic: North Carolina workers' compensation. coverage requirements. Which of the following employers in North Carolina is required to provide workers' compensation insurance? A. A retail store with 4 part-time employees. B. A construction company with 2 full-time employees. C. A family-owned business with only immediate family members employed. D. A non-profit organization with unpaid volunteers. Answer: B. A construction company with 2 full-time employees. Explanation: in North Carolina, most employers with 3 or more employees are required to provide workers' compensation insurance. However, for construction companies, the requirement applies even if the company has just 1 employee. Family-owned businesses employing only immediate family members and organizations using only volunteers are typically exempt unless they have paid employees. Therefore, the construction company with 2 full-time employees is required to carry workers' compensation insurance. Question 18. Topic: General liability insurance. Products and completed operations. A North Carolina contractor finishes installing a new deck for a homeowner. A month later, the deck collapses, causing significant damage to the home. The contractor's general liability policy includes products and completed operations coverage. What will this coverage pay for? A. The cost to rebuild the deck. B. The homeowner's medical bills. C. The contractor's legal defense costs. D. Both B and C. Answer: D. Both B and C. Explanation: products and completed operations coverage under a general liability policy protects businesses against claims related to faulty workmanship or defective products that cause injury or damage after the work is completed. In this scenario, it would cover the homeowner's medical bills if they were injured by the collapse, as well as the contractor's legal defense costs. However, it typically would not cover the cost of rebuilding the deck, as that is often excluded under defective workmanship exclusions. Question 19. Topic: North Carolina dwelling insurance. Deeper 1 versus Deeper 3. Which of the following is a key difference between a North Carolina Deeper 1 basic form and Deeper 3 special form dwelling insurance policy? A. Deeper 1 covers only the structure, while Deeper 3 covers structure and personal property. B. Deeper 1 covers a named peril basis, while Deeper 3 covers on an open peril basis. C. Deeper 1 covers liability, but Deeper 3 does not. D. Deeper 3 is only available to owner-occupied dwellings. Answer: B. Deeper 1 covers a named peril basis, while Deeper 3 covers on an open peril basis. Explanation: A EUN basic form policy provides coverage on a named peril basis, meaning it only covers perils specifically listed in the policy. In contrast, a DE3 special form policy provides coverage on an open peril basis for the dwelling, meaning it covers all perils except those specifically excluded. The Deeper 3 policy offers broader protection because it assumes coverage for all risks unless explicitly excluded, whereas the Deeper 1 covers only the perils named in the policy, such as fire, lightning, and internal explosion. Deeper 3 policies are more comprehensive and provide greater protection for the insured property. Question 20. Topic: North Carolina flood insurance. Waiting periods. A North Carolina homeowner purchases a flood insurance policy through the National Flood Insurance Program (NFIP). When will the policy typically go into effect? A. Immediately upon purchase. B. 15 days after purchase. C. 30 days after purchase. D. 60 days after purchase. Answer: C. 30 days after purchase. Explanation: flood insurance policies purchased through the National Flood Insurance Program (NFIP) typically have a 30-day waiting period before they go into effect. This waiting period helps prevent people from purchasing flood insurance only when a flood is imminent. There are some exceptions to this rule, such as when a policy is required as part of a mortgage closing. Question 21. Topic: Workers' compensation insurance. Employee versus independent contractor. A roofing contractor in North Carolina hires several workers to assist with a large project. To determine whether the workers are entitled to workers' compensation coverage under North Carolina law, which of the following is the most important factor? A. Whether the workers are paid hourly or by the project. B. Whether the workers supply their own tools. C. Whether the contractor controls how the work is performed. D. Whether the workers are classified as independent contractors on tax forms. Answer: C. Whether the contractor controls how the work is performed. Explanation: in North Carolina, the determination of whether a worker is an employee or an independent contractor for workers' compensation purposes depends on several factors, with the primary factor being control, specifically whether the employer has the right to control how, when, and whether work is done. If the contractor has significant control over how the workers perform their tasks, they are likely to be classified as employees, making them eligible for workers' compensation coverage. The other factors are considered but are secondary to the degree of control exerted by the employer. Question 22. Topic: Commercial auto insurance. Symbol 1. Under North Carolina Commercial Auto Insurance Policy, Symbol 1 is listed on the declarations page. What does Symbol 1 represent? A. Coverage for specifically described autos. B. Coverage for owned autos only. C. Coverage for hired and non-owned autos only. D. Coverage for any auto. Answer: D. Coverage for any auto. Explanation: in commercial auto insurance, Symbol 1 represents any auto, meaning the policy provides the broadest possible coverage, extending to all autos the insured owns, hires, borrows, or uses in connection with the business. This is the most inclusive symbol and provides maximum protection for liability arising from the use of any vehicle. Question 23. Topic: North Carolina homeowners insurance. Liability exclusions. A homeowner in North Carolina hosts a large party at their home during which a guest slips and falls on the stairs, injuring themselves. The guest sues the homeowner for medical expenses and lost wages. Which of the following exclusions would not apply to the homeowner's liability coverage in this situation? A. Business pursuits. B. Intentional acts. C. Watercraft liability. D. Expected or intended injury. Answer: C. Watercraft liability. Explanation: watercraft liability coverage would not apply in this situation because the claim involves a personal injury at the homeowner's residence, not an incident involving a watercraft. Business pursuits, intentional acts, and expected or intended injury exclusions might apply in other scenarios, but this specific claim is for personal injury due to an accident, which is typically covered under the homeowner's liability insurance. Question 24. Topic: North Carolina homeowners insurance. Loss settlement provisions. A homeowner in North Carolina insures their home under a homeowner's policy with a replacement cost loss settlement provision. The home is partially damaged in a fire and repairs cost $50,000. At the time of the loss, the homeowner's dwelling coverage is only $150,000, but the home's replacement cost is $200,000. What amount will the insurer pay for the repairs? A. $50,000. B. $37,500. C. $25,000. D. Nothing, because the home is underinsured. Answer: B. $37,500. Explanation: because the homeowner is underinsured, the dwelling is insured for less than 80% of its replacement cost. The insurer will apply a coinsurance penalty to the loss settlement. The homeowner has only insured the home for 75% of its replacement cost, $150,000 to $100,000, so the insurer will pay 75% of the $50,000 repair cost, or $37,500. The remaining $12,500 must be paid by the homeowner. Question 25. Topic: Commercial general liability insurance. Completed operations. A North Carolina contractor completes a major renovation project at a client's home. 6 months later, a defect in the contractor's work causes a pipe to burst, flooding the client's home and causing $100,000 in damages. The contractor's general liability policy includes completed operations coverage. What will this coverage pay for? A. The full cost of repairs to the home. B. Only the cost of replacing the defective pipe. C. Legal fees but not the cost of repairs. D. The damages caused by the burst pipe but not the cost of replacing it. Answer: D. The damages caused by the burst pipe but not the cost of replacing it. Explanation: completed operations coverage under general liability policy covers damages caused by the contractor's work after the work has been completed, but it does not cover the cost of repairing or replacing the defective workmanship itself. In this case, the coverage would pay for the water damage caused by the burst pipe but not the cost of replacing the defective pipe. Question 26. Topic: North Carolina homeowners insurance. Earthquake endorsement. A homeowner in North Carolina wants to add an earthquake endorsement to their homeowner's policy. How does the deductible for earthquake coverage typically differ from the standard deductible in a homeowner's policy? A. It is a flat dollar amount. B. It is a percentage of the policy's dwelling coverage. C. It applies only to personal property losses. D. It is waived if the home is completely destroyed. Answer: B. It is a percentage of the policy's dwelling coverage. Explanation: the earthquake endorsement typically carries a percentage deductible, which is based on a percentage of the insured dwelling coverage amount. This deductible is generally higher than the standard homeowner's policy deductible and can range from 5% to 15% of the dwelling limit, depending on the policy and the insurer. Question 27. Topic: North Carolina workers' compensation. compensable injuries. Under North Carolina workers' compensation laws, which of the following injuries would not be compensable? A. An employee is injured while performing job duties at the employer's location. B. An employee is injured during a lunch break while running personal errands off-site. C. An employee is injured while traveling for work to meet a client. D. An employee is injured while attending a work-sponsored event. Answer: B. An employee is injured during a lunch break while running personal errands off-site. Explanation: workers' compensation typically does not cover injuries that occur while an employee is engaged in personal activities such as running personal errands during a lunch break. Injuries that occur off-site and unrelated to work duties are not compensable. Injuries sustained while performing job-related tasks or attending work-sponsored events are generally covered. Question 28. Topic: North Carolina Personal Auto Policy. Medical payments coverage. Under North Carolina personal auto policy, what does medical payments MedPay coverage typically provide? A. Payment for lost wages due to injury in an auto accident. B. Coverage for legal defense costs if sued by a third party. C. Reimbursement for medical expenses incurred by the insured and passengers. D. Payment for damage to personal property inside the vehicle. Answer: C. Reimbursement for medical expenses incurred by the insured and passengers. Explanation: medical payments MedPay coverage in a North Carolina personal auto policy provides reimbursement for medical expenses incurred by the insured, their family members, and any passengers in the vehicle, regardless of who is at fault in an accident. This coverage helps pay for necessary medical and funeral expenses resulting from a covered auto accident. Question 29. Topic: North Carolina commercial property insurance. Vacancy provisions. A commercial building in North Carolina has been vacant for 90 consecutive days. If a loss occurs, how will the vacancy provisions of the commercial property policy affect the claim? A. The claim will be paid in full. B. The claim will be denied if caused by a covered peril. C. The amount paid may be reduced by 15%. D. Certain perils will be excluded and the claim amount may be reduced. Answer: D. Certain perils will be excluded and the claim amount may be reduced. Explanation: under a commercial property policy, if a building has been vacant for more than 60 days, the insurer may limit coverage. Certain perils, such as vandalism, theft, and water damage, may be excluded entirely, and if a covered loss occurs, the claim amount may be reduced, often by 15%, due to the building's vacant status. Question 30. Topic: North Carolina flood insurance. Coverage limits. A North Carolina homeowner is purchasing flood insurance through the National Flood Insurance Program (NFIP). What is the maximum coverage limit available for a residential building under the NFIP? A. $100,000. B. $250,000. C. $500,000. D. $750,000. Answer: B. $250,000. Explanation: the maximum coverage limit for a residential building under the National Flood Insurance Program (NFIP) is $250,000. For personal property contents, the maximum coverage is $100,000. This coverage applies to damages caused by flooding, a peril not covered under standard homeowners insurance policies.